Okay, let's be honest. Have you ever looked at a stock's technical report and just felt your eyes glaze over? All those numbers, all those acronyms? Well, today we're going to change that. We're going to take a real technical report for the stock WDC, and we're going to decode this story it's telling us piece by piece.
I mean, at first glance, this stuff is completely overwhelming, right? SMA, RSI, MACD, Bollinger Bands. It really does look like a foreign language. But here's the secret. Hidden inside all this data is a pretty compelling story about this stock's journey. So our job is to play detective, find the key clues, and put them all together.
And wow, this chart right here, it tells you the central drama in a single picture. Just look at this. Over the past year, this stock has just rocketed up from a low of around 28 bucks to a high of almost 189. And the current price? It's right there, literally knocking on the door of its absolute peak for the entire year. That is a massive, massive climb.
So let's think of this whole thing as a health check for the stock. We're going to put on our detective hats, and we'll start with the most obvious symptom on the chart, this incredibly high price. What does the report actually tell us about it? Well, the report boils it all down to this one pretty striking number. The 52-week position is 99.33%. You know what that means? It means the current price is in the top 1% of its entire trading range for the last year. It is standing on the highest peak it has seen in a long, long time.
So this single data point immediately brings up the big question, the one that's going to guide our whole investigation. It's not enough to just know what happened. We need to understand why it happened and how it got here. So let's dig into the report and find some answers.
So where do we even begin? Well, the first thing we need to do is understand the stock's overall direction. Is this huge spike just a fluke, or is it part of a much larger pattern? To find that out, we've got to check the trend.
And to do that, we use a tool called moving averages. Basically, they just smooth out all the noisy day-to-day price jumps to give us a much clearer picture of the underlying direction. I really like to think of it as the prevailing current of the stock's price. Is that current flowing up, down, or just sideways?
And here's where the story starts getting a lot clearer. The short-term average, looking at just the last 20 days, is about $175. But the long-term average, looking back 200 days, it's way down at $92. The fact that the current price of 187 is way higher than both of those, well, that paints a very, very clear picture for us.
So our first diagnosis is in, and it's pretty clear. This is not just some random spike. This stock has been on a powerful, sustained upward path for a while. That prevailing current we talked about, it is strong and it is flowing decisively up. Okay, so we know the direction, but that's only half the story. How much force is actually behind this move? Our next step is to measure its momentum, which is basically the speed at which it's climbing.
And a key tool for that is the Relative Strength Index, or RSI. You know, the easiest way to think about this is like it's the stock speedometer. It doesn't just tell us that the car is moving forward, it tells us how fast it's accelerating.
The report gives us an RSI value of 62.17. Now, anything over 50 suggests that the upward momentum is winning. So at over 62, our speedometer is telling us this stock isn't just cruising along, it has some serious acceleration behind it.
But this is where our little detective story gets a bit more complicated. Just when we think we've got it all figured out, the report throws us a curveball, a conflicting clue that kind of suggests we should look a little bit closer.
And here it is, our conflicting clue. It's a negative number from an indicator called the MACD histogram, which it's a bit complex, but it basically measures the change in momentum. So while the RSI shows the car is still going fast, this little negative number is like an early warning sign that maybe, just maybe, the driver is easing their foot off the gas. That upward thrust could be losing some steam.
All right, so we've got a strong trend and high, but possibly fading momentum. This brings us to the final part of our investigation, the risk. I mean, has the price moved so far, so fast that it's now stretched thin, kind of like an elastic band that's been pulled away too tight?
To measure this, we can look at something called Bollinger Bands. The best way to picture them is like guardrails on the price highway. They get wider and narrower with volatility, and they define what's considered a normal range for the price. So when the price actually hits one of those guardrails, it suggests an extreme move.
And now look at this number from the report. The Bollinger Band position is 95.24%. So what this tells us is that the price isn't just near the upper guardrail, it's practically scraping paint against it. It's at the absolute top edge of its recent trading highway.
So what does this all mean? It means the stock looks statistically overextended. That elastic band we're talking about, it's pulled very, very tight. Now, that doesn't guarantee it's going to snap back, but it's a really clear signal of elevated risk. The report also gives us a handy map of the immediate territory. It shows the next potential ceiling, or what traders call a resistance level, is up at $191.41, and the first potential floor or support level is down at $180.34. These are the key battlegrounds to watch if the stock either tries to push higher or starts to pull back.
Okay, we've gathered all our clues, we've looked at the trend, we've measured the momentum, and we've assessed the risk. Now it's time to put it all together and figure out our full diagnosis based on everything the report has shown us.
So here's the summary, the story in a nutshell. The trend? It's undeniably strong and pointing upward. The momentum? It's high, for sure, but we have that one little clue that it might be starting to fade. And finally, the risk? Well, it's elevated, with the price being statistically stretched to its limit. And this, right here, is probably the most important takeaway of all. The technical report didn't just give us a simple yes or no, a buy or a sell. It gave us a story. It's a story of powerful strength clashing with some very real cautionary signals. It's a narrative filled with conflict and tension. And that is the real power of learning to read a report like this. We're not trying to be fortune tellers here. The goal is never to predict the future perfectly, but to use all these clues to build the clearest possible understanding of what's happening right now, in the present.
So, we've laid out all the evidence. A powerful upward current that's now meeting some clear signs of exhaustion and risk. The report has given us all the clues. So the final question is really for you. Based on all this evidence, how would you read the story?